What is going on, everybody? Happy Friday. Welcome to another edition of David Green Real Estate YouTube Live here on a Friday. Hope everyone is doing well. It's Friday, April 14th. Not quite Friday the 13th. Let's check in and see who we have as we wait for David to join us. We got a really good topic tonight. We're going to be talking a little bit about the mortgage rates, interest rates, what we've been seeing. Interest rates have been dropping. We've been seeing a little bit of a curb on inflation, not to mention a little bit of mortgage demand is picking up. And we're going to talk a little bit about the Florida housing market if we have a chance, and make sure we have some time to get to your calls, your questions, your concerns, your ideas, maybe some things that you're seeing in your market or your own investing or your own journey. So looking forward to tonight. Let's see who we have here hanging out with us. Speaking of Florida, we've got Kevin Hawthorne saying good morning, good evening from Lakeland, Florida. Tanya, our newest Spartan League member, welcome. Checking in from all the way Northwest Michigan. She's got some short-term rental things she's doing up there. Check into it. Reach out to her. Robert Reynolds, member of the David Green team here, representing and saying hello from sunny Los Angeles. What's going on? Another SoCal and another Spartan League member. We've got Lisa representing. Andrew, what's going on? Happy Friday. Yes, from Southern New Jersey. Oh, good. What's going on, Francis? Good to see you. Happy Friday. Hope you guys are doing well. Fish and Pete, I love that name. How's it going, everyone? Saying what's up and hanging out from all the way in Merced, California. By the way, Angela says hello. She is in Pittsburgh, Pennsylvania, doing her amazing workouts and cold plunges. Robert says, hey, Lisa, make sure to come out to David's SoCal meetup next Saturday. That's right. Make sure you guys keep an eye out. I think they're close to being sold out, too. So you might want to keep an eye out for that and see if you can get your tickets if they're still available. Noah says, cheers from Anchorage, Alaska. Hopefully it's not too cold out there. Francis, representing in Sacramento, a longtime friend and client of the David Green team. Very, very good people, him and his wife, Marie, and they do some really big things in the investing world. Let's see, Brian saying hello from Anaheim. We got a lot of people in SoCal representing today. I love this. Zebra Journey, that's a cool name. Saying thank goodness, thank God it's Friday from all the way in Madison, Wisconsin. Jimmy Wisecarver, another strong Spartan League member here, and he's literally strong in real life as well, representing all the way from California. Good to see you, my friend. Dora, the Explorer, always here. I hope you are okay that I call you that name. I just think it just comes to mind and I have to say it. And you're probably someone who likes to explore, being from Napa. Devin from Whittier, California. Great to have you from all the way down in SoCal. Let's see here. Dan, the man from Maryland, saying what's up. Good to see you as well. Who else we got here tonight? Sarah from Minneapolis. Welcome. Good to see you. And we got Scott representing all the way from Montgomery, Alabama. We got a lot of people representing from all across the United States today and saying what's up. We got Art from none other than San Diego. Not to mention Pat O is saying what's up from all the way in Queen Creek, Arizona. That's a cool name. Jen Ree, what's going on? Representing from the EDH. Hope you're enjoying it out there. Let's see, Alma saying what's up from Glendora. We should have I hope everybody who's representing from SoCal tonight is making sure that they are going out to David's meetup in SoCal. That's going to be a great opportunity. They always sell out at these things. They always end up being really good experiences. So you should make sure, if you haven't already, go check that out. Robert, can you drop in the comments where people could get tickets to go out there if it's not already sold out? Juan saying what's up from Texas. Good to see you. Hope everything's good out there. Another Whittier. Whittier should just have their own little mini group out there, their mini mastermind. Let's see, Morgan representing all the way from Utah. Speaking of Utah, we got Mark Hansen representing as well. Good to see you, Mark. Hope everything's going well. Spartan League member there, retreat goer with the David Green team. K-Sill from MA, what's going on? Let's see, yes, Robert's right. Lots of SoCal. Let's see you all at the SoCal meetup. We got to see you guys there for sure. What's up, 50 TCH? I don't know how to say that. 50 I don't know. But all the way from Oakland, welcome. Good to see you. You're hanging out with us. Tammy, Mountain House, right outside of Tracy, California. You know, when I used to be a speech therapist, I had a client that I would go see all the way out in Mountain House, and that was a long drive for me. I was living, I think, in Ripon at the time, and that was like that was like almost an hour drive. Mountain House is just deep. You just keep going, you go and you go, but there's a lot of nice houses out there. Yeah, you don't know how to change your name? Me either. I wish I could help you out on that, but I don't know how to do that, but that's okay. Let's see who else we have here. Yeah, that's it. And look who's here hanging out with us. Watch, I'm going to do a little switcheroo. I like having David on the left. I think if that's his better side, is his left side. But yeah, welcome 50 TCH. Good to have you here. Mark Hansen's asking, Kyle, what's your favorite part of the week? Well, I'm actually in Phoenix right now on a little spring break getaway with my wife and kids, and me and my son, we actually hiked Camelback Mountain. It was a 2 hour and 20-minute hike, just the two of us. He's 11 years old. We made it all the way to the top and down in one piece. So that was my favorite part of the week. I'm pretty fortunate to have a son that will allow me to take him on different adventures and be willing to go all the way up and all the way back down without complaining. He actually did better than me. I was sucking wind for a big part of it. 50TCH asks, where can we find out about the SoCal meetup? Well, that's a great question. I believe if you go to David's Instagram page, and then once you go to his profile, and it should be in his link tree, one of the top ones should be in there. And let me just take a look and see if I can find it for you really quick. And David's actually live right now as we speak. Yes. It's hiding in there somewhere. And if you know, by chance, Robert, drop it in there. Definitely got to do that for us. Let's see. Oh, perfect. Thanks, Robert. I'm going to try to drop that in the chat as we speak. Boom. Hopefully that goes through. Copy and paste it. And that's how you can get your tickets. It's all about how to grow your real estate portfolio. So definitely something worth checking out, and make sure you get it on there. Our Kevin says his son just turned 11. He tags along when you go on long distance runs. That's really cool. Good for you. You got to teach him young. That's huge. And then, you got to tell me, David, what does this mean?
I'm sorry, man. That is really funny. Jeff says, what's with the Vegas Illusionist show music? We're talking about our background music. Yeah.
That's a great question, Jeff, because we like it. Yeah. And a lot of people have been liking it as well. But I feel like we should be doing some David Copperfield kind of stuff in the background for sure. I love that. That's hilarious.
I'm sorry, Kyle. I did just throw that up there because that made me laugh.
No,
I think let me ask you guys in the comments, do you like the music to start it, or is it distracting? Is it cool? Does it get you in the mood to learn about real estate and build wealth? Extremely interested in hearing what you have to say tonight. That's Vanessa Perina. Well, that's what I like to hear.
Well, cool, because we got a lot of things a lot of things to talk about tonight. So as I mentioned, we're going to be talking a little bit about interest rates, the fact that they have been dropping. Mortgage demand has been picking up. If we have some time, we'll talk a little bit about the Florida market specifically, because we had a lot of requests this week come in saying, hey, can you guys address that? So we've got a video we could potentially watch on that. Not to mention, we've got some cool stuff we're going to show you, just some behind the scenes of what's been happening in DG's world. Let's see. A lot of people are saying they like the music.
And we just lost Kyle. He's at a Airbnb in Arizona right now. So his internet went down. But that's why we have two of us, because this can happen. It happens sometimes on the podcast as well. Oh, he's back. Welcome, my friend.
Thank you. I heard everything you said. That was the funny thing. So
that happens during the podcast quite a bit, where we'll be talking and then someone just loses internet. And I don't want to slow the guest, so I'll just jump in and talk. Or sometimes I'll lose it and then I'll come back in and just pick up like I know what's being said and I really have no idea where we've been. That happens not as seldomly as you would think. You kind of got to wing it sometimes, so not a problem. But everyone likes the music, other than Angela Haydorn, who says it makes her feel weird. That doesn't mean bad, right? Weird could be good.
That's what I was thinking.
You got to get out of your comfort zone.
Yeah, sometimes it's good to feel weird.
Ooh, look what Devin says. Devin Feigoth.
Oh, good.
All right, sorry. We both clicked the same time there. Where did there we go. He loves DG's World, a helpful tool. Well, welcome everybody. Thank you for being with us here tonight. It's Friday and we want to teach you how to make some money. So if you're on Instagram, head over to my YouTube channel, youtube.com/@DavidGreen24. If you're on YouTube, you are in the right place. I don't think Angela liked me saying that weird might be good. That's funny. She's in a Spartan League. We're going to start off today's show. Well, Kyle, first off, what's the topic? What are we getting into today?
Yeah, so we're going to be talking a little bit about how interest rates are dropping. What does that mean for demand? We got a video we can watch regarding that, as well as the potential for mortgage demand picking up, what impact that has on other people, and then a little bit about the Florida housing market if we've got some time as well. Not to mention we can take some calls.
All right. We are going to start off today's show with a segment that we're going to probably be doing later in the show other days, but because somebody brought up DG's World, we're actually going to show you guys what DG's World is and share a post, the post of the week, basically. So This is a Discord channel that I run where people get an opportunity to connect with one of my loan officers, real estate agents, me, Kyle, Christian, insurance brokers. All the people that you need to get a transaction are there. You can ask questions and get answers very quickly, as well as learn from all the people that have done deals with us before. So you close a deal with us in a different location, you bought a short-term rental somewhere, you bought an apartment somewhere, you want to talk about what you did. The members share deals and opportunities out that way. And then we also do some education. So Kyle's going to pull up a screen share here, and I'll show you what we were talking about.
Let me pull it up here. Share screen.
Vanessa's excited. Vanessa, I like this energy.
Yes.
She gave us a hell yeah there.
All right. Can you see my Discord?
Yeah, you might need to. Are you able to zoom in a little bit? Does that have that option?
Any better?
Slightly, yeah. So basically, oh yeah, that's way better. There you go. On our Spartan League call Monday, we talked about a lot of things. We were there for 2.5 hours talking real estate with all the members. And the subject of cap rates came up. Now, if you're listening to this, you are probably a human being, which I'm assuming most of you are because AI hasn't really taken off yet, which means you probably are confused by cap rates. It is one of the most not inherently confusing things, but misunderstood things that make it confusing in real estate investing. Steve M is also giving me a hell yeah. That's a guy who's like, I don't understand these cap rates either, bruh. And someone needs to tell me. So we clarified what they are not. We talked about what they are. And in the post here with Ray, she actually asked me to clarify what I meant when I described that when valuing multifamily or commercial real estate, the cap rate is more powerful than the net operating income. It is a bigger lever. So if you can put the odds in your favor to get a compressing cap rate, you are much more likely to make money than just improving the NOI. So can you scroll down a little bit there, Kyle? This is my answer. I basically compared cap rates with multifamily to appreciation in single family. So you make money in single family in two ways. You cash flow or the property goes up in value. Now, technically, you also make money. You add equity to it, right? Like you can buy equity by buying a good deal. But in general, all things being equal, you buy in the right area and it goes up. And if you compare increasing cash flow with increasing values, it's not even close. Buying in the right area will make you much more money than just improving the cash flow by, lowering your insurance by $11 a month. There's only so much you can do with that. And I made a comparison that multifamily real estate is similar. You can improve the NOI by trying to bump rents and trying to decrease expenses, but there's only so much you can do. But if the cap rate goes from an 8 to a 5, you're going to do incredibly well. It's going to go up in value a lot. And so I just drew the comparison so people could understand how to value multifamily property, commercial property, and not be confused at the next meetup when someone mentions cap rate. Kyle, do you remember what we talked about was like the number one mistake people make when they're referring to cap rate, like amateurs? I don't know if you were at that part of the call. Oh, no, you weren't on the call, were you?
No, I had to drop off that one. Yeah.
So that would be your quick tip for today. A cap rate is not ROI. It is people who don't understand it will throw it around like that. Oh, I'm buying it at a 7 cap or it's a 14 cap. What they mean is a 14% return on investment, but that is not the same as cap rate. So don't be that guy. Don't be that gal. Don't throw around your triplex and talk about the cap rate when you're actually referring to the cash on cash return. And that's our little DG's World segment there, brought to you by Spartan League.
I love it. Cool stuff. Really good stuff. And that's the cool thing about the Spartan League and DG's World. But you get with Spartan League, right? You get these long calls with David every quarter. You get access to be able to ask him questions directly and ask other people questions. But it helps clear up a lot of the myths or the misnomers that happen, and you're actually getting real world advice. We had a new member just join this last week, Tanya. Who's in the comments, and she came in and introduced herself last night on our Thursday night call. And she said, listen, the reason why I joined is because I know that you guys are real people. You guys aren't scammers. You guys know what you're talking about. And I know that everyone in this group is committed to being the best at what they do and committing themselves to their craft. And that's absolutely the truth with Spartan League and the people in Spartan League and the people that run Spartan League.
Yeah. Not only do you get me once a quarter, you get Kyle twice a week. You get access to budgeting software and budgeting training so that you can actually see where your money's going. You get different real estate investors on pretty much every single week that are really successful, sharing how their strategy works. Imagine like being on the Bigger Pockets podcast, but you get to talk to the person who's being interviewed. You get to ask questions of that person. or you get to direct your questions just like this call to get them answered. So that's what it's supposed to be. And not everybody knows about it. I talk about it, but I don't talk about it a ton. So if you guys would like to be in the Bigger Pockets podcast, listening to the same people, but asking them direct questions, check out SpartanLeague.com and just tell me what you like of the website. I'm extremely proud of it. So if you hate it, you probably have to lie. But if you like it, you can definitely tell me.
Yes, please do that. We would love that. All right, cool. Here's what I'm going to do. I'm actually going to start the ticker here down at the bottom. And what this is your opportunity to come on this show live and ask a question. Specifically, we'd like it to be around tonight's topic. Maybe it's around cap rates, but it can also be about interest rates dropping, or it can be about the housing market. It can be about maybe something that you're facing in one of the deals that you have right now. So there's a lot of things that we can jump in and talk about, but text that number down below, 833-777-0309. Let us know your name and the topic you want to talk about, and we'll see if we can get you connected here on the call tonight. David, Mark had a great question a little bit earlier. I'm going to see if I can find it. Here he goes. He said, David, what was your favorite part of the week?
It's been tough, man. I've had a tough year, maybe even more than a year. So there wasn't really anything that was super fun, but I was able to get the last chapter for Pillars written. So that book is going to be sent off to editing. And I don't know this, but I think that the BP team told me we're looking at a June or July release, which is not that far away. Actually, no, it can't be that. Maybe they're talking about next year. I was thinking in my head it was much earlier in the year. Might be next year. But that book, I think, is going to help a lot of people. It's all about how to build wealth in a tough economy, or really just build wealth the right way, not the easy way. So that felt good. And then I got back to jiu-jitsu last week and made it again 2 times this week. So that was probably my favorite part of the week. What about you, Kyle? What was your favorite part?
Nice. Yeah, I shared a little bit earlier. I did a hike, a 2.5-hour hike with my son.
Isaac?
Yeah, and that was a blast. We had a great time.
It's crazy he's big enough to do that with you now.
He's better than me. That's the scary thing. I was like, he's just kept asking, "Are you okay, Dad?" I'm like, "I'll be fine."
Because you're breathing hard and he's not.
Yeah, and then he comes down, and then he's running around. He's swimming for the rest of the day, playing at the park. I'm like, how do you have that much strength and energy left? Because I do not.
All the same thing the old people used to say to us when we were kids, right?
Yes.
We were like, why are you always worried about energy? I don't get it.
Yes, and I finally understood the term "enjoy your youth while it lasts," because it's true. It goes away really quick. Much quicker than I ever thought it would too. I always thought like in my 30s and 40s, I'd probably be in pretty darn good shape, which I am, but still it's not what it used to be.
Very good point.
Let's see here. Speaking of, we have a couple topics we're going to talk about. Did you want to jump into tonight's first video, David, and start breaking this down?
Yeah, let's do it. And while that's happening, guys, ask your questions in the chat while we're watching this video.
All right.
And welcome back. In today's video, I'm going to touch on some early indications of home buying demand, what could impact our housing market in the weeks and months ahead. And there's some very big changes occurring right now, because have a look at this. The 10-year Treasury note is at 3.3%, a decrease of almost 3 basis points today, but a giant decrease compared to the highs we saw back in early March when the yield was at 4.07%. And also back in October 2022, the yield was 4.21%. I mention this because the yield on the 10-year U.S. Treasury note mimics the rates we see for mortgage rates. So look at this. According to the Mortgage News Daily, as of today, which is the 5th of April, average 30-year fixed rate mortgages is at 6.16% for people with great credit, of course. 6.16%. For a 30-year FHA or VA, that's around 5.80%. Also, you can get a 15-year loan at 5.75%, which is more or less a 2-month low. Look at this, 6.16%, the lowest rates we've had going back to, wait for it, February 2nd this year, when rates were at 5.99%. Therefore, average 30-year fixed rate mortgage rates are at a 2-month low. Of course, having said that, rates 1 year ago were at 5.02%. Therefore, rates have increased approximately 1 percentage point over the past 12 months. However, though, but look at this. Rates as of March 2nd, just 1 month ago, were at 7.10%. This means average rates have decreased approximately 1 percentage point over the last 30 days. And here's exactly how that's impacting home buyers right now. So here's a look at your average monthly housing payment based on principal and interest for someone looking to buy a $450,000 home, putting 5% down. Looking at their housing payment today versus 1 month ago when rates were averaging at 7.10%. So at 7.1%, again, the average from 1 month ago, approximately, your housing payment based on principal and interest would be just under $2,900 per month. However, though, fast forward to today, look at this. Average rates 6.16%. Your new housing payment would be $2,607 per month. In other words, to buy that same $450,000 home 1 month ago compared to today, you're going to save approximately $266 per month to buy that same house. So that's number one. Number two is, given the fact that rates have decreased approximately 1 percentage point over the last 1 month, that actually increases buyers' purchasing power by about 10%. And also, number three, take a look at this, because for rates at 6.16%, your total interest paid over the life of the loan, again, 30 years, your interest paid over the life of the loan would be $511,000. I can see right there. But at 7.10%, your interest paid over the life of the loan would be just under $610,000. Therefore, because rates have decreased from 7.1% down to 6.16% over the life of the loan, you're going to save approximately $100,000. Now, I'd love to hear from you guys regarding this. Do you guys think that because rates have decreased to 6.2% more or less, do you guys think that's going to be impacting home buying demand, or therefore is it going to be increasing home buying demand in the weeks ahead? Please comment below. Here's something else you guys should be aware of as well, is that even though rates have been decreasing to more or less a 2-month low, applications for home loans actually decreased last week. This is according to the MBA, which is just posted today at the time of this video for the week ended March 31st this year. So applications for refis decreased by 5% compared to the previous week, and of course was down 59% from 1 year ago. Also, despite the fact that rates have been decreasing, applications for home loans to buy houses actually decreased by 4% compared to 1 week ago, and also is down by 35% compared to the same week 1 year ago. And this actually is a new trend because as I've been reporting to you guys, applications for home loans to buy houses were increasing for 4 consecutive weeks. So this is actually the first time in the last 5 weeks in which applications actually decreased. Here's another way to look at their purchase index over time. Here's their index actually over the past 1 year. So for the week ended February 27th, their index was at 138.8, the lowest levels in at least the last 20 years. So applications increased for 4 consecutive weeks after that, but last week it actually decreased. In fact, when we broaden this to 2015, the current levels right now are more or less on par with October of 2015. In other words, even though applications for home loans had increased for 4 consecutive weeks, mortgage demand still remains at very low levels. And going back to the MBA's report here, it says spring has arrived, but the housing market is missing the customary burst in new listings and purchase activity that typically mark the season. After 4 weeks of increasing purchase application activity, volume decreased a bit this week, even with another small drop in rates. Additionally, refi application volume continues to be quite low, again down by 59% from 1 year ago, although the mortgage rate for conforming loan balance loans declined by 5 basis points over the week to 6.40%. the mortgage rate for jumbo loans, that's high balance loans, actually increased by 9 basis points to 6.36%. So for loans for conforming loan balances, that's not a jumbo loan, rates actually decreased by 5 basis points, whereas jumbo loans actually increased by 9 basis points. And it says here this divergence in rates suggests that banks may be tightening credit in response to recent challenges by the fallout of Silicon Valley Bank and, of course, Signature Bank as well, preserving balance sheet capacity as deposit balances have declined. So what this means is that they're suggesting that because rates for jumbo loans increase, yet conforming loan balances or rates on conforming loans actually decrease, that could imply that lenders are tightening their credit for high balance loans or jumbo loans. So take a look at this. Here's average rates according to the MBA. Average rates as of the week ended March 8th were at 6.79%. And now for April 5th, they're down to 6.40%. So rates have decreased approximately 40 basis points ever since the beginning of March this year. That's for 30-year conforming loan balances. Here is jumbo loan balances, though. Look at this. So on March 8th, rates are at 6.49%. Now they're at 6.36%, a small decrease from the highs we saw back in early March. The reason why I'm sharing this is that this could impact, or this trend continues, this could impact the luxury home market. So markets in which home prices are above conforming loan balances could be impacted by these rising rates here. Whereas rates for conforming loan balances are decreasing, again, jumbo loans are actually increasing. Again, this is a very, very short-term trend, and I'll definitely keep you posted. So going back to some early signs of home buying activity, according to the National Association of Realtors, based on their foot traffic report for February, on a national level, home showings decreased by 14% compared to February of 2022. Showings decreased in every region as well. The Northeast fell by 14%, the Midwest down by 12%, the West declined by 19%.
All right, Kyle, I think that's good.
Experienced a decrease of.
So we've got interest rate fluctuations. Kyle, what are some of your thoughts after listening to that? What's going through your head? Because you're not necessarily a mortgage guy, so I'm curious what you were thinking as you were listening.
So, as a real estate agent, I can definitely relate to what he's talking about. With the spring burst, right, that we normally see every spring, there is an increase in showings related to what it was this past winter. So we're definitely seeing more of that. I've had several properties that either my buyers have put offers on or my own listings where it has been multiple offers. And last week we talked about the Cal HFA Dream for All loan and how that maybe created a little bit of stimulus. One of my favorite things that I actually came across earlier today was one of our kind of well-known appraisers in the Sacramento area. He actually is sort of a thought leader and influencer. His name's Ryan Lundquist, and he put out a tweet or a quote. He basically said, the housing market right now feels like a relationship. So he's kind of picked up on David Green's relationship analogies, which I love. But he said the housing market feels like a relationship that's been struggling. It just had a good vacation. There's some excitement at the moment, but there are still deep underlying problems. And so that's kind of the feeling that I'm getting. I know a lot of people, and I'm seeing a little bit in the comments saying, man, we're going back to what it was, a year or two ago. The demand is there. There's still tons of people, but that want to buy houses. It's going to be ultra competitive, but I still think there's going to be some underlying things. There's still some buyers out there that just don't want to buy. Buyers are still picky despite that interest rate. There's a lot of people that don't want to sell their house. One of the people we're trying to get on here to come on live, that's one of his questions is, hey, listen, I've got a low interest rate on my current house. Should I go buy another one and get a higher interest rate?
That's really good stuff. I would liken today's market to dating in Alaska. So there's not enough women for the men, and maybe the women are behaving badly out there, right? Maybe they're not really taking care of the guys. They're they're in a narcissistic energy, and the guys aren't very happy. And they're like, you know what? I don't like your high interest rate payment here. I don't think that I want to commit to you. But they're looking around and they're like, well, there's no one else because there's not enough of these women. So some other guy's willing to jump in and put up with that. And what you thought you deserved and what you can actually get are very different. We have this issue of high rates making houses not affordable, but there's not enough houses. So there's some other buyer who's willing to pay that. So even though you want prices to come down before you get married, you want rates to come down, you can't, because there isn't enough to pick from. So there are definitely some problems in our economy. It is like a bad relationship. I agree with that. But that's why it's an imbalance. There's too many buyers and not enough sellers. There's too much demand and not enough supply. There are too many men in Alaska and not enough women. And that makes this tough. A couple of the comments that I want to read, and then I'll give my takes on the video. Vanessa Perina with the great attitude says, I was ready to refi 2 of my Burr properties back in February, but something came up in my credit report and I was denied the refi. Got the wind knocked out of me. My rate was 6.2. Is that still the same? Well, Vanessa, here's what you need to do. You need to email us at the One Brokerage and ask to be put in touch with a loan officer and let us do your loan, and we will tell you what the rates are and what options you have. Kyle will throw up the email for you there. It's intake@theonebrokerage.com. So talk to one of our loan officers and they will let you know. Alma Young says, I do not own any property. However, I'm not sure if Spartan League is too advanced for me to start my learning and start the process. That's a great question, Alma. Spartan League is actually the most basic thing that I offer. Like, it's relatively compared to any other real estate course, it's in like so cheap. It's almost not like, it doesn't count. Not saying that it like a couple $100 isn't a lot of money, but most people are going to be charging like 10 grand, 15 grand, 20 grand. Someone like me would probably charge more than that to teach real estate investing. This is meant for not just investing. This is meant for getting your entire financial picture taken care of. We're going to have you put software on your phone to track your spending. We are going to have you come up with a budget of how much you're going to allot for housing, how much for your entertainment, how much for travel, how much for gas, how much for clothes. Like, every dollar is going to have a job. And then we are going to have you track your income too. And then we're going to be asking you, how can you make more money? How can you save more money? And how can you invest better? So it's actually perfect for somebody that's not already a badass. Like, it probably wouldn't be the best for someone who already owns 40 properties. They'd get access to me, but there's different groups I have that are more expensive that are for those people that own more assets. So we'd love to see you in there, Alma. Check out SpartanLeague.com and don't worry about the imagery. There's going to be a lot of like testosterone driven Spartans. That's just because I think that stuff's cool. That's why I'm wearing this shirt right now. But it's definitely a safe place to be. Steve M says, this is a great topic. Higher interest rates affect all of us. Mark says, are going to stick with jujitsu consistently again? I would say, yes, I'm going to stick with it until I don't, because that's just how it works, right? You're like, are you stick with your diet again? Yeah, I'm going to stick with it until you fall off of it. Life is not about sticking with something forever. Life is about constantly falling off the horse and getting back on the horse. And you just want to shorten the times in between when you fall off and you get back on, because we're all going to be falling off. Even Kyle, believe it or not, can fall off. The machine says, I got my ninjutsu, come get some. Okay, that's what the Ninja Turtles practiced. Chris Lockwood says, David, what are you eating, bro? I am eating a protein bar. Pure protein. What is this? Chocolate Deluxe. I order those on Amazon. They come to my office, and that keeps me from eating bad foods. I was eating cashews a little bit earlier. Dominic Galena says, would love to hear what you're going to say about the Florida market. We may talk about that a little bit here. Angela Haydorn, there are several people from all stages of the investing properties, from getting there first to having several. Oh, Angela, you're talking about Spartan League. Thank you so much. She's one of our favorite members there. Dan Feigoth, do you think the rates are going to continue to go down, or is this a temporary drop that could go back up? If they do go down more, they will come back up. I don't know that, okay? But I feel confident enough to say they could go down a little bit more, but they're going to go back up much more than they came down. Like, our government, right or wrong, has the belief that you stop inflation by raising rates. And every time inflation gets to be terrible, they just want to jack rates up. So that's not going to stop, because inflation's not going to get bad. We are going to be in a very unhealthy relationship of rates getting higher and prices going up at the same time, because the government doesn't understand you can't stop inflation by raising rates. So this is a very welcome relief. Now, that does kind of open up as a segue into what I was going to say. The rates have dropped. Maybe last, like, what do you think, Kyle? Like 7 to 14 days. Is that a good period of time that you'd say? In general, we've seen like a little bit of relief, right?
Yeah, exactly.
In the last 2 weeks, the David Green team's escrows have increased by almost 50%. 2-week period. Okay. Complete coincidence? Maybe. But what I'm trying to tell you guys, at least for California real estate, is that while we investors are sitting out here like, this is ridiculous, these prices are too high, they have to come back down, I'm angry and I want to complain and I'm going to get in David's Instagram and I'm going to leave negative comments because I'm mad at the world and someone needs to hear how I feel. There's a lot of other people that are been looking for houses for 6 months, for 9 months, for 12 months, and this little dip in rates, they're like, boom, I can get in there. They're approved at 700. The houses they want are 750. They got right at that point now where they can afford 740, and that seller dropped the price to 740 and covered their closing costs, and boom, they're in contract. So he did mention overall mortgage applications are down. So you would think, oh, well, even though rates are down, there's less people looking for homes. That means people that are just getting in the game are down. There's a lot of people that have been in this game, and those are the ones that go into contract. Kyle, you can co-sign for this. Most buyers on their first swing or their first week don't get into contract, right?
Correct.
In general, the people who are out there competing in a market that's getting multiple buyers, what does the process look like? What's their the psychological arc of the buyer experience?
I mean, there's a psychological arc and then there's just a logistical arc, right? So the psychological arc is like, I got to go out and I got to check some houses. I got to research neighborhoods. I got to get a feeling if I feel safe in this neighborhood. I got to ask my mom if she likes the area, and then my spouse has to like the area. So there's a lot of like approval and a lot of looking and feeling and touching and smelling to make sure that this is the right area, and then analyzing to make sure it's the right deal. And then maybe throwing out some offers and then hoping they get accepted, and then learning, okay, these are the types of offers that get accepted. So learning how to strategically write those, that's all the psychological side of things. And there's just the logistical side, right? You start with a consultation with your realtor and you get really clear on your buy box, right? And then from there, there's a lot of research that goes in, a lot of upfront education from the real estate agent on how to structure your offer, what goes into inspections or escrows or contingencies and that kind of stuff. So it's definitely a time frame. It's very rarely, even when during COVID, when the market was so hot, very rarely is it like, oh, I'm going to go buy a house today. I like that one. I'll get my pre-approval and submit an offer and get it accepted all in the same day.
Would you also say, in general, they need to swing and miss a couple times before they actually write the offer that's going to win?
For sure. Yeah.
Right.
We as agents will do our best to educate up front, but sometimes you actually got to feel it and you got to experience that taste of what it's like putting out an offer until you feel confident putting out stronger offers.
Yeah. So people are just now they're submitting mortgage applications. Those aren't your competition. They're not going to go buy the house. Mm-hmm. It's people that have been pre-approved for 6 months that are tired of trying and failing, that are like, screw it. They want 800. I'll pay 825 and I'll just be done with it. I'll pay 850 and I'll get into contract. So that's why when we see rates going down, our escrows have gone up so drastically, because even though it is a tough market for investors, that is not the same as a bad housing market. I wish it was. It's still a tough market I mean, Kyle, you got people you're working with, right? Is it easy or hard to put people in contract right now?
It's extremely hard for a variety of different reasons. And it just takes more time. You have to be more patient.
There we go. Let's see what else people are saying here. I love the information Christian provided on the 3-to-1 buy down. It was really helpful. My question would be, it looks like the Fed is projecting lower rates in 2024, 2025. Oh, then he cut off there. Again, that's a great question to email us at the One Brokerage about. Like, you guys have, if you're in DG's world, you can just tag one of them and you can get an answer right away in the Discord. But if you're not, you can still email us and we can get you put in touch with a loan officer and we can talk there. The points that I really wanted to take from the video had more to do with the fact that rates are down. It doesn't matter that mortgage applications are down. Escrows are going up. It's if you get a littlest bit of relief, boom, people are putting houses in contract. It's like you have this huge wave of demand wanting to jump in and buy homes, and the second there's a chink in the armor, boom, they're on it. And then rates go up again, and like a lot of them pull back, but it's not like a ghost town where no one's looking to buy these houses. They're just wanting to wait for that little moment where they think, okay, this is the best, perfect time. Steve M makes a good point. I'm seeing price cuts continue to in SoCal at the 1 million price point. Buyers are very sensitive to rates, or waiting for rates, it seems. Steve, it's not just buyers, it's buyers at high price points. So like, I'll give you guys an example of how interest rates affect different price points of homes. All right. So let's take a $200,000 house or $200,000 loan. So maybe the house is worth, 240 or 250 or something like that. And the interest rate is, let's go with 6%. Okay. The payment on that would be $1,200. It's $1,199. So we're going to call it $1,200 at 6%. If the rate goes from 6% to 8%, it jumps from 1,200 to 1,468. Now, that's not like nothing, but in general, if you can afford $1,200 a month, you can probably afford 1,468. Maybe it doesn't cash flow as good as it would have, but maybe you just go buy a duplex instead of a single family house. Maybe you get add an ADU on that thing. Maybe you play the long game, and so you still buy it. You can make an extra, what's the difference there? $268 a month. You can make that waiting tables at Applebee's. Okay. Like, you could go get a job making lattes at a coffee shop, and you can make more than $250 a month to be able to afford that house. Okay. Let's take the same jump, 6% to 8%, and let's bump it up to a house where your loan is $1 million. Because that's the number Steve mentioned there. So at 6%, $1 million loan is just shy of $6,000, $5,996. So we're going to call that $6,000. You bump $1 million loan up to 8%, the payment goes from $6,000 to $7,338. Okay, that's a almost $1,400 difference. That's not something you can go pick up a shift at a coffee shop to do. If you bump it up to 9%, it goes to $8,050. So from $6,000 to $8,050 for the same house, to jump from 6. You see how like radically different that is? $6,000 to $8,000, that's like a 30% jump in your mortgage, right? So what you find is higher priced homes are way more sensitive to interest rates than lower priced homes. Lower priced homes are mildly affected. Higher priced homes are extremely affected, which is why you're seeing price cuts in the $1 million range, but you're not seeing price cuts on the $500,000 homes. Like, there's nothing in Southern California that I could think of that's priced at $500,000 that's sitting on the market for very long. Just doesn't happen unless it's got tenants you can't kick out or something like that. So I target nicer luxury properties when markets are tougher, because those are the first ones to get affected, and they're the first ones to go up in value when the market gets stronger. And I avoid the lower price stuff unless it's a really competitive market. What do you think so far, Kyle?
Yeah, this is awesome. This is really good. We actually have a couple people lined up that we can bring in and have a chat with.
All right, let's do it.
All right, first one we're going to bring up is Zachary. Zachary, what's going on?
Hey, how you doing? Glad to be here.
What's up, Zach?
So tell us what's going on,
David. Well, so I've been listening to you guys for a while, joining these YouTubes live for the last couple of months, and definitely like being able to hear your perspective and stuff a lot. And yeah, with interest rates going down, my situation is I recently just purchased a house in September, and I'm currently house hacking that by renting out to traveling nurses in the area. And so I've been having success with that, and been kind of looking at trying to get another house. And then when your video today with interest rates dropping, I've heard different things from lenders where I might be able to get a new primary residence loan. I might not. So I don't really know which information is correct. Because I've heard from Dave, it has to wait a year, and then they're telling me, oh no, 6-8 months, you're good to go. So
did you have a question in there?
I did not, but I can formulate a question.
Yeah, well, tell me what you'd like from me. Maybe you wanted an opinion on what you were saying.
Yes. So do I have to wait? Because I know with kind of everything that's going on, lending has been getting tighter and harder to get another loan from what I've heard. So do I have to wait that year to get another primary residence loan, or kind of how does that process work?
Are you going to use us to get the loan? You have another lender?
I've talked to a couple lenders kind of in my local area.
What did they tell you?
The one that I talked to most recently told me after like 6 or 7 months that I could get another primary residence loan. Whereas listening to like Bigger Pockets podcast, I'd heard that you had to wait a year.
No, you don't. You have to intend to live in the property when you bought the first one for a year. That does not mean you can't get another loan until it's been a year. When you apply for the loan with the lender and it's been less than a year, they're going to ask, how do we know that you're not just trying to buy an investment property using a primary residence loan? So I can see how that becomes confusing, because like the rule is, if you're going to get a loan for a primary residence, you have to intend to live in it for a year. Well, let's say you live in it for 6 months, or let's say live in it for 6 days, and your mom gets sick and you realize like, oh, I have to move back home, or the commute is way worse than you thought and you're just too tired trying to drive to work every day, or your neighbor smokes weed and you don't like the smell of it, or there's a dog that barks that wakes you up, like anything. You can't be forced to live in a house. They can't tell you like legally you have to stay in this house. If you intended to live in it and then life circumstances change, you can move out and then you can rent it out to someone else. They can't tell you that you can't rent it out. If they go and they prove that you never intended to live there, that's mortgage fraud. That's what you want to avoid.
Okay.
All right. So that's where the year thing comes from. And I will frequently say, buy a house, wait a year, move in the next one, because it's under the assumption that you intended to live in it for a year. But if something happens and you can't, you can get another primary residence loan. You just got to convince the lender why. So I've been in that position before. I had a house and I wanted to buy another house, and I had to show them, well, I was working at the police department and they had me reporting to Oakland, but now they're going to have me reporting to Pittsburgh. There's a Pittsburgh in California. No, that's confusing. I was super confused by that too.
Okay.
I'm going to be reporting to Pittsburgh, so I have to move to a different house. And they're like, okay, that makes sense. We'll give you the loan for the new property. But I had to like submit a map that showed the underwriters, like, this is why I'm moving from one primary to another.
Okay.
Make sense?
Yes. Okay. So
and I'm glad you asked, because everyone gets confused by this. They're like, oh, I have to wait. No, you don't. What you have to do is have a good mortgage broker, bro. Don't date around. Get a person who's really good. Get yourself a good girl. Stick with that person. And when you're like, I'm hungry, they'll cook you something to eat. You don't have to text 4 different girls and be like, which one of you guys is in the mood to cook? Because I want somebody to make me some food, right? If you're in DG's world, or you have one of our mortgage brokers, you can just fire them an email or a text. Or if you're in the Discord, you can just say, hey, can I do this? And you'll get you'll get all these people answering these questions. You won't even have to wait for the YouTube live. So while we love you in here, we could have been talking about this for like weeks at a time if you were in there, or if you had a relationship with one of our loan officers, they would have already told you, because they can get the information super quick. If you ask a question they don't know, they go into the Discord and they have 50 different employees and they're like, hey, has anyone ever seen this? And one of them is going to have been working on it. We're doing like 200 loans a month, right? Like when we were at the peak. So they're all seeing stuff all the time, and then they all share that information really quickly.
Okay.
Any other questions?
Yeah. So, well, in regards to that, how do I, because I know, so my house now, that's my primary residence. What do I have to do? Like convert that to a, like an investment property, to where I can kind of get that off my DTI? Because like I said, I'm house hacking right now, renting out to like midterm rentals is mainly what I'm doing.
Yeah.
And so I didn't know how lenders would look at that. I've heard that's more gray area.
It is. And gray area doesn't mean illegal. Gray area means it's going to be more complicated, right? Yep. So again, that would be a great question where we could get one of the loan officers to answer instead of just me. But the answer is going to be, if you decide to rent it out and you have a lease that you submit, in many cases, they'll say, all right, well, he was living there, but now he has a lease agreement with someone else, and that person's agreeing to pay $2,400 a month. Well, his mortgage is $2,700 a month. They'll let you take a percentage of the lease. So usually it's like 75% of the 2,400. Now I got myself into a math problem here. That's like $600 less than 2,400. So they're going to give you credit for 1,800, but you're spending, say, 2,700. So you're going to get knocked for $900 of your income against your DTI, not the full 2,400. And then when you buy the next house, we have loans that will let you take income from those properties and allow it to qualify. Not just your income, your debt to income. I use loans that use income the property is going to produce. So they don't even look at my DTI. That way I don't have to submit like a stack of papers this high that shows my tax returns and everything else.
Right. Yeah. Okay.
But so thank you for letting me beat up on you a little bit for seeing other people, because I'm a jealous mortgage broker.
No, I mean, when I started looking, I just went with who my realtor had used and who they recommended, and they made it a really easy process. But
you grew up in a small town. And the girl down the street, your brother was like, what about her? You're like, okay, I need a date to prom. And you dated her and you never even asked why. I don't even know if I like this girl. This is just the one that was right there. And now you got this whole world in front of you with lots of different girls, and you can find the one that's going to be the best for you. And I'm very confident that that's going to be us. So I'd love to get you in touch with one of those people. And I'd even love to see you in DG's world, because you're going to learn probably more in a week there than you would have learned in like 2 years listening to podcasts. Like, the world's changed. I was thinking about this today, right? I just wrapped up that book Pillars that I've been writing. I imagine being a kid and who's your favorite author when you were a kid, Kyle? Did you have one?
R.L. Stein.
Okay. R.L. Goosebumps.
Yeah.
What was the other one what was the other series he wrote that was for the older kids?
Yeah, I can't remember the name.
Goosebumps. Like something to do with Elm Street. Was it? No, it had something to do with there was another series for older kids, Fear Street. Fear Street, yeah. Fear Street, right? Like when you're in second grade, you weren't allowed to read Fear Street, but you could read Goosebumps or whatever. I wasn't allowed to read any of it because I had strict parents. But imagine if you could have DM'd R.L. Stein as a fourth grader. How cool would it have been if you could have asked him, how come you made the monster with 7 eyes instead of 2 or something like that? And he would have given you an answer. Like, we live in an incredibly crazy world, but our minds still think of it like we can't get access to that information, right? I got to wait till I read a book. I got to wait till I listen to a podcast. But we have this world where people are learning things at an incredibly fast rate because they have access to us, and we can give the information. I don't have to write a whole book. I can just write a paragraph in a Discord thing, and boom, everybody gets to see that. So that's why we made it. We put it together. It's free for anybody that has done a deal with the David Green team or with the One Brokerage. And it's super cheap if you haven't done that. It's like $99 a month. But the idea is to get as many of our former clients together, sharing information with each other. So if you do a deal with us, that's why it's going to be free for you. For the other people that are dating other people, it's just $99. So I'd love to see you in there and be able to talk about this more. And I'd love to see you on more lives.
Yeah. So are you guys able to do loans in Missouri?
We have to ask that. I know. So in all 50 states, we can do the DSCR loans, the ones that use the income from the property, not from the person. I don't have the list in front of me of which of the 50 states we can do conventional loans in yet. But I know that every time I talk to Christian, we're going to eventually have all 50. We've got more than 50 now. We probably have like 30 or 40 at this point. But that would be an acceptable reason to have a different girlfriend. I will say that. Like, if we're not available in your area, like we don't live down the street from you, I can understand that you'd want to move on and date somebody else. But any other reason needs to be me, Zach.
Okay. Yeah, so I'll definitely reach out and try and do another loan, because I'm definitely trying to purchase something again this summer. So like I said, this smaller town, a couple of large hospitals, there's nurses coming in all the time. So
hell yeah. That's what you want to be looking for, man. You may be the guy that ends up with like 10 properties before anyone else figures what's going on.
If so, I'll tell you all about it at BPCon.
All right. That's awesome,
Actually,
man.
I'll shoot you a text to the answer to your Missouri question too.
Okay.
All right. Yeah. Know each other? Have you two been seeing each other? And I don't know about this.
Who?
You and Kyle? How do you have his number, Kyle?
Because he texted into the show.
That's right. Okay. All right.
I had to jump in the gun.
Yeah.
All right, Zach. Great to meet you, man.
Yeah.
You too. Definitely stay in touch. Thank you guys. Appreciate it.
You're welcome.
All right. 50-itch says, sorry, new here and maybe missed this earlier. How do we join the Discord? That's probably when Kyle put up the little link there. So I know that's kind of confusing. Take a picture with your phone so you can memorize that. I think we also put it in the comments. Steve says, is this the same for VA loans? VA loans are a form of conventional financing, so it's not. You don't get to use the income from the property. You have to use your own income for a VA loan because it's 0% down. Vanessa says your analogies are hilarious and on point. Vanessa, she should win like the gold star for best attitude. I could use this cheerleader in my life. Thank you for that, Vanessa. Kevin says, if you have a lease and is on your taxes, lenders can use it to benefit your debt to income. Yeah, that is much more succinctly said than the way I said it. Thank you for that, Kevin. David Green, can the One Brokerage assist with a cash out refi for commercial property with a land lease? Maybe. I'm not as optimistic as that. And that just has to do with commercial lending being difficult. So most residential loans come from like really big pools of an insane amount of money. And the lender compensates us for underwriting your file and finding you and bringing you to them. So you don't actually have to pay us as your mortgage broker. We get paid from the person that's going to be funding your loan. In the commercial space, because there's not these huge pools of money, because it's a little more complicated to underwrite these deals, it's typically think of like the money source has a person that only lends out their money. It's not a person that can lend out. Like if they go to me and they say, David, you can lend out our money, they're going to charge you extra because you didn't use their guy. So what had the rate to our clients ends up being higher on these commercial projects if they come to us than it does on residential. And because of that, I just don't push it as hard, because there's people that would pay it, but I try to avoid having them pay higher rates if they have to. But it would still be worth us looking into for you to see what your situation is there, Zebra. Steve M says, we have so much access. I remember you have to walk to the library to read a book written 10 years ago. That's just 10 years ago. That's very, very true. And you had to like find the author's address and handwrite them a letter and like buy a stamp and hope that they wrote you back, which was not likely to happen. Like, it's insane that we can read a book right now and we can DM the author immediately and are likely to get a response. I think that's super cool. Let's see here. Vanessa, this girl I talk about better have been raised by some good old-fashioned Italian parents. Yes, that's right. That's what happens when you work with the wrong mortgage broker. We can't guarantee the quality of the person that you're going to be dating, and they might take you for all you're worth, and you might not know it. You don't want to get your heart broke in the real estate game. All right, we have another person to bring in, Kyle.
We do. And by the way, to Zach's earlier question, does the one brokerage serve Missouri? They do. You guys are fully licensed now in Missouri, so you can help out with just about any loan product.
Did you ask a person that in the Discord channel while we were?
I just texted Ricardo and Christian, see who would respond faster. But I should have done that.
It would have been a cool way to do it. Yeah.
Yeah. All right. Our next caller here that we have is none other than Fishing Pete. He has a house right now that he's house hacking. He's got a really good interest rate, super low, and wants to ask a question about his scenario. So go for it, Fishing Pete.
Hey, how you guys doing, man? Thanks for having me on.
Yeah, thanks for pulling over, and glad to see that you're safe in your vehicle there.
Yeah, I listen to you guys' podcast. I mean, I'm a real estate enthusiast. I follow all the podcasts on my way to work, on my way from work. So, yeah, I'm really like into real estate. So my question was in regards to
hang on, before you ask your question, let me ask you one.
Yeah.
If you had to choose, if you were more enthusiastic about real estate or fishing, which one would you choose?
No. Well, the reason why I'm doing real estate is so I can do the fishing.
So fishing is your passion and real estate is your vehicle to get you there, right?
Yeah. So I'm actually in multiple vehicles, but yeah, that's another story. But yes.
Okay. Because I mean, people that like to fish love to fish. They got decals on their cars. They wear fishing T-shirts. It's like there's very few things that people get as crazy about as CrossFit, veganism, and fishing.
Yeah. So this is kind of funny. I actually, to your jiu-jitsu references, I get them because I actually did jiu-jitsu myself for 5 years. I got to be a blue belt.
Wow.
So every time you do the jiu-jitsu analogy, I love them, man. So
Felicidades. That's awesome. Okay. Yeah. Tell me why you like the jiu-jitsu analogies. For anyone who doesn't do it, why are we addicted to using those?
So it's just like real estate. I mean, jiu-jitsu is like it's life. You can be in a bad spot, but you're only in the bad spot temporarily. You got to find your way out of that bad spot. So that's why jiu-jitsu to me is really relatable. You know what I mean? And it's like real estate. You start from zero, you know absolutely nothing, and you're just getting manhandled. But every time you get manhandled, you leave with a little piece of information, and that's what I do to the episodes here and the all the podcasts. And I listen to you. I mean, I bought your books.
Really good. I like that. Every time you get manhandled, you leave with a little bit of information. There's people that train at my gym, and I'm sure it'd be the same at yours. Like there's this probably kid, he's maybe 15, 16. He's like a sophomore, junior in high school who's been going since he was 6 years old. I haven't rolled with that guy, but I don't want to. Like I watch him rip through grown ass men like a hot knife through butter and just like effortlessly destroy them, and he's this teenager, right? So like sometimes we get on the podcast and we hear about Cody who's buying like apartment complexes looking like he's 14 and he's 21 years old, and you feel like you're falling behind in life, but you're not. Every time you listen to that and you feel bad, you're picking up a little bit more, you're getting better, you just don't realize it.
Yes, he's a black belt in real estate.
Yes, that's right. Yeah, and the other thing is in jiu-jitsu, this is what's weird. You don't know who's a badass. You can't know unless you actually know jiu-jitsu, so you watch him like move and walk. Like Kyle and I can watch a guy play basketball. If I watch him dribble a ball 3 times and shoot once, I can tell you right off the bat like how good he is. Like we just know how basketball looks. But I don't know jiu-jitsu like that. You'd have to be incredibly good at jiu-jitsu, but you can't tell from looking at someone how good they are. In fact, jiu-jitsu is the only thing in my life that has made me jealous of being small. I'm like, I wish I was a little guy. Never once in my life have I been like, he's so lucky he's 5'4". But in jiu-jitsu, I'm like, man, they're gas tank. They could go forever. They're not going to get tired like me. You can't tell. And real estate's the same way. You cannot tell from looking at someone what they know, how well they are at doing it, how much success they've had. It's like an equalizer. But I'm bringing this up to say, and then I'm going to let Pete get to his question. It is very easy to be intimidated when you first go and see the 16-year-old that's awesome and be like, this isn't for me. It's very easy to hear the podcast and listen to people that have all these units and think this isn't for me. It's not true. It is impossible to keep going to jiu-jitsu and not get better. Like Pete just said, he got a blue belt. It is impossible to keep learning about real estate and not get better.
Yeah, no, I agree. 100%.
Thanks, man. I appreciate you saying that. Do you have any plans to train in the future or what?
I kind of hung it up because I did amateur mixed martial arts, and if I go back to jiu-jitsu, I'm gonna want to fight again. They just go hand in.
That's a problem. That's like a gateway drug.
So I picked up fishing instead, you know.
Okay. Yeah, much more calm.
Yeah. But yeah, my question, I bought a duplex. I'm house hacking right now. I currently got a 2.75% on that loan, and I actually spoke with Ricardo, one of your loan officers.
Ricky
I
Suave.
spoke with him last year, and well, I had like a series of events where I had to like get into a little bit of debt, so I'm working on that right now to get my DTI down.
Yep.
And while that was going on, I was waiting to see like where interest rates would go. And I mean, I follow Dave too at the Data Deli, so I'm like constantly on the market, you know, and watch all his reports. So my question is, when interest rates fall down, or when they get down enough to where I can do a cash out refi, or maybe even refi, because I haven't spoken to Ricardo yet because I'm not ready. I'm not at that point. Do I just do a cash out refi, and then I want to buy a personal home, and then maybe there's enough to get another investment property? So I want to accumulate properties as I go.
Well, you're asking, should you wait to buy more property till after the cash out refi?
Yeah. So like, so if the interest rates, maybe let's say they go down as far as maybe 5, maybe high 4s, would that be like a good rate to?
Oh, that dude, if they got down to that point, I would be like, we are blessed and super lucky. I don't expect them to go that low.
Yeah,
they went that low before because the government was afraid of going into a recession because of COVID. We had shut down all productivity, right? So in order to stop us from like having everything stop, they were just injecting us with cocaine. That's what this was. Like they kept lowering rates, they kept printing money, everything they could do to make it look like the economy was doing good and keep it going well. Now they're like, oh, our heart's beating 180 beats per minute. We're going to die. We have too much inflation. How do we slow it down? Now they're injecting us with like, you know, a downer. I can't think of a good example of one right now, like benzo or something. And they're trying to get our heart rate to come down by raising these rates. They're not going to lower them all the way down to the 4s unless we're going into a recession. And it's like, oh, the heart's going too slow. We have to speed it up again. So I wouldn't wait for that to happen. I think where they've gone right now has been a stroke of luck. I don't know that they're going to get much lower than this. In fact, I think they'll probably start to go up again in the future.
Okay. Yeah.
I'm not trying to discourage you.
No.
Do you know what point they needed to get to before a cash out refi made sense?
No, and that's the thing. I haven't spoken to Ricardo yet because I was gonna wait maybe till like July once I got like my DTI a lot better, and then kind of see where interest rates are at that time, or maybe even just wait a little bit because I'm not in a rush, to because I know this is not a get rich quick.
Mm-hmm.
I mean, I'm able to wait as long as till like I'm in a good position to either do a cash out refi and then leverage my property from there.
Well, can you buy additional real estate with low down payment loans if you don't do a cash out refi?
Would I would my interest rate? I mean, that would it would be just like a 5 or?
I don't know where they are right now, but I guess what I'm getting at is if you couldn't do a cash out refi, could you save enough money from work to put 3.5% or 5% down on a property if you came across another deal that you wanted?
Yeah, and that's the other thing too. Like, I would be willing to even sell my property because I'm not married. I'm not like emotionally attached to it. So whatever my options, I'm like whatever my best option is.
Okay. So I would say, run that by Ricardo and see what advice he has. And then the way that I play the refinance game is I don't ever plan on a refi. I just wait to if it shows itself, I'm going to use it, right? Like maybe to use an MMA reference for you. That you have a really, really nice guillotine, but you're not going to go hunting for it because you don't want to get knocked out, right? But if they're dumb enough to put their head right there, try to they mess up a takedown and there's a guillotine, grab it and put it on, right? So if interest rates go really low and it's like, this makes sense, whether it's a cash out refi, a rate and term refi, jump in and do it. But you don't want your strategy to be, I can't do anything unless I can do this cash out refi. Because if all you have is the guillotine, you're going to get in trouble just like trying to force that person into it. Does that make sense?
Yeah. No, I got you, man.
Okay.
Appreciate
all right, Fishing Pete. I hope we see you on a future Friday.
Yeah, no, I'll be here every Friday, man. And let me just tell you, you're a black belt in analogies, man.
Yep. We got to be good at something, right? Kyle's handsome. Some people are smart, and I can make analogies. That's my thing.
There you go.
Pete,
all right, man.
Thank you, bro.
Hey, Pete, what's your favorite fish to catch?
Oh, largemouth bass. I haven't caught a smallmouth. I've been trying to get a smallmouth, but the heaviest I've gotten was around 6 pounds. That's my record, my personal record.
Nice. What's your favorite bait to use?
I like to use the weedless Texas rig.
Texas rig. Okay, nice.
Yeah, rig.
With a real
Kyle does a little bit of fishing with his son, if you can't tell.
Yeah.
Oh man, it's awesome. Texas rig or a spinner bait. I like to use the frog around this time because that's when they're just spawning, So
Are you listening to fishing podcasts too? I'm sure they have those out there.
Yeah, I follow the. Yeah, I almost stopped, man.
Yeah. Well, I'll tell you what. I'll give you a custom analogy. If Brandon Turner was a fish, he would be a largemouth bass because that guy likes to talk.
There you go. Nice job.
All right, Pete.
Thanks,
Hasta
Pete.
luego.
Yeah. Fun stuff. This is very good.
Yeah, that was fun. Do we have anybody else want to come in, or is everybody just being entertained right now? Are you not entertained on this Friday night?
Yeah, we had some other requests. By the way, you guys, if you're enjoying this, I know I've been up to about 125 people. We're at 110 right now. Do us a favor, hit that like button, hit that subscribe button, hit that bell notification. We want to keep doing this week to week to week, and you guys helping the YouTube algorithm helps us out. So with everybody that's watching this, if we can get 110 people right now to just go in there and hit that like button and make sure you subscribe to this, we would greatly appreciate it. Maybe we'll do a fishing episode one day. Who knows? Yeah,
it's been harder than I thought to build up my YouTube following. Maybe just because we shoot straight and I don't make those clickbaity type videos where the sky is falling, the market is crashing, do this or you're going to lose everything. But that's the stuff people click on and subscribe to. So in order to keep me from having to do that, please subscribe to the channel and then share this with other people. If you could just post it on your Facebook or wherever people might see it and think, oh, that's cool. We'd love to get more engagement on these things. It is growing though. We've got more people on today's show than I think we've had before.
Yeah, absolutely. Not to mention, congrats, David. Your Instagram hit 150,000.
Did it? I didn't even see that.
Yeah,
that went pretty quick. I was only 120 something not too long ago.
Yep. So that's good news there.
I'm still getting destroyed by the largemouth bass himself, Brandon Turner. But I think, what do you guys think? Is my Instagram been better? What do you want to see more of on there? Tell me in the comments, like, what would make you guys more excited about my Instagram? Like, what are the Instagrams that are doing well? What are they doing, Kyle? What do you think?
Ooh, they're putting out short form content. That is huge because we were talking about this in Spartan League last night. The attention span of people is just getting shorter and shorter and shorter. So that's a huge thing, is that short form content. And I would say a lot of like engaging stuff, just stuff that kind of grabs your attention and gets you to put a comment. A lot of it's controversial too, not just real estate, but even outside.
You know what? Now that you mentioned that, the social media company that posts my stuff on Instagram, many of you guys probably didn't know I'm not personally selecting that. We have a company that takes content that I say, puts it together and puts it on Instagram, has been posting way more controversial stuff. And they have been taking clips. I don't want to say they're out of context, but they're just not providing the whole context, right? And they throw that in there, and I've been getting some pissed off people in the comments about what I've been saying, but that might be why I'm getting more engagement. So there could be a method to that madness.
Yeah, what's the old adage, like any kind of coverage is good coverage, even
or
if
any attention's good attention. Yeah,
exactly. Mark says we could see some more gym pics.
Gym pictures. I don't think I've ever posted a gym picture on Instagram. That's funny. Kyle gets them though. Maybe are you posting them and like on your Instagram, and that's why people are following you?
I post them only on the Spartan League Discord. So if you join the Spartan League, you might see a gym pic of David, because I want to make sure your accountability section is filled out every single day.
That's true. Kyle will message me like, "Hey, dude, you better get to the gym today. I need to see a picture to prove it. You didn't go yesterday," and that does help. It definitely helps. And we don't post like selfies from the gym, but we'll post like the weight from the scale or the amount of miles on the Peloton or whatever. Like, fitness is a very important part of hitting your goals and staying committed to something. So that's another part of Spartan League. And Juan, you're welcome. Juan Restrepo, you're welcome for clarifying the question there. Kyle, how's Phoenix?
It's not as hot as you would think. It's been like 80s, 90s. It was 98 on the first day we got here, which is pretty hot. But it's been 80s, 90s, beautiful. Kids have been just in the pool swimming every single day and having a lot of fun. So it's been really relaxing.
All right. Do we have anyone else that's here that wants to come in and ask questions, wants to talk about the market heating up? Maybe you're just frustrated, right? Are you the person like, I don't know, like there's a lot of investors that saved up their money, they got pre-approved, they want to jump into the market, and they just can't find a deal, right? Are you a woman who has, like, you're of marrying age, you're gainfully employed, you got your college degree, everything that you were told to do, you've done, and you're like, why can't I find a guy, right? That's kind of how this market feels. So we could talk about that, or we could talk about real estate, whatever you guys want to get into. But I feel there's an insane amount of frustration in American culture right now, and I think a lot of it's financial. I think a lot of it's investing wise, but I think a lot of it is happening in other areas. So we're going to stick away from politics for obvious reasons. But if you guys are frustrated by stuff, let's talk about it. We're frustrated all the time, and unfortunately Kyle probably has to listen to me talk about what frustrates me more than anything else, and if he hates it, he hides it very, very well. So we're used to that. If you guys want to come in and talk.
Yeah, we do have one person that's actually might try to come on and talk a little bit about the tax protests. So that might be something we can talk about. And Kehinde, yeah, if you want to text the number below, he says, bring me, we'll bring you. Text the number 833-777-0309. And bring, send us a text. Let us know what you want to talk about, what the topic is. And if it fits with tonight's topic, we will definitely try to make sure we get you guys connected here and live.
Sean Riley said 800 credit score, 20% down, investor loan, and lenders want 3 points. I don't know what you're referring to there. I'm guessing you're upset, that you're frustrated. Maybe because I say you're frustrated things. Right now, lenders are, you guys have heard in the news, it's harder to get loans. What I think is going on, because we don't know, they don't always tell you, but like you kind of got to read between the lines, or what's the thing? Read the tea leaves. I think that's the thing people are saying right now. I think lenders are nervous that we are going to be heading into a recession, which means the loans they've been giving will be more risky if people lose their jobs and default on their payments. And so to mitigate their risk, they are charging more money up front because that makes the loan worth more. I think that's what's going on. Mark is frustrated that he has to wait to the end of the year to start funding and building his barn dominium. Waiting is not a strong suit. That's true. We often say patience is a virtue, but some of the most successful people in the world are the most impatient. Elon Musk is ridiculously impatient. So sometimes you just have to accept that you're not a patient person and try to mitigate the damage that that's going to cause. But the impatient people are usually the most ambitious people and the most productive people. Sometimes patience doesn't help. You're too comfortable not doing anything. Steve M says recession is the elephant in the room. That's my guess on why we're seeing lenders charging more points. Rates, I don't think they went down to us, but they didn't go down to lenders, because what lenders were expecting was a worse market than what we're getting. So they've already priced into these loans that the market's going to get worse, so rates need to go higher. Then when the market ends up better than what they thought, they drop down their prices because they've already cooked some of that risk into what they were giving people. Any luck, Kyle, with getting anybody that wants to come on?
Not currently. We are still got a few people trying to connect. So
Okay.
if we can get them connected, we will jump on. I do have a video that we can look at.
I thought we were out of them. That's perfect.
No, we had one regarding the Florida market, actually. So a few people have been asking, hey, I want you guys to talk a little bit about the Florida market, because that seems like that's been a hot topic recently.
Is Florida popular right now in our country? Is there a governor that's popular over there? Are we having a solid real estate market in that state?
I think that is the case. So let's jump into this and get it going.
Market crash over. That's exactly what we are going to cover today by doing a deep dive analysis into the most current data that exists within the Delray Beach, Boynton Beach, and Boca Raton, Florida housing markets. And breaking news, CPI numbers are in, and they came in light. They were less than expected. And the stock market, which prices in change instantaneously, seems to like it for today. But it will be interesting to see if they like it tomorrow when PPI numbers come out. But the breaking news is that inflation rose just 0.1% in March and 5% from a year ago as Fed rate hikes take hold. And to be clear, although this might seem like a win, and Wall Street seems to be interpreting it that way in the near term, just so we're all on the same page here, inflation is still on the uptick. And the data showed that while inflation is still well above where the Fed feels comfortable, it is at least showing continuing signs of decelerating. And the Fed is targeting 2%. And although these numbers came in better than expected, we are still at 5% compared to last year. 5%. The target is 2%. But Wall Street likey, at least right now, but whether Big Papa Powell likey has yet to be determined. And while I'm not going to do a deep dive analysis into what the CPI numbers are for March 2023, because we will be here all day, what I do want to highlight is that shelter cost in March dropped to 0.6 from a high of 0.8 in February. Now, if you've been watching for a while, you know that I am committed to sharing the truth about what's happening in each market within Florida. And I've also shared that housing is a lagging metric. Unlike the stock market, which prices in change in real time, the housing market takes time, and much of the data that I share is old, but it's the most current data that's been reported. And while March numbers will not be reported by the Florida Realtor Association until the end of this month, I've got them today. And so today we're going to do a deep dive analysis into what happened in March for Boca Raton, Boynton Beach, and Delray Beach, because I was completely blown away with the drop in home prices in Delray Beach. And I'm committed to telling you the truth in real time so that you can make the best decisions for yourself, for your family, and for your financial bottom line. And what you see on the screen is Delray Beach single family home sales for March. And the average sold price in Delray Beach for a single family home was down 36.4% compared to February. and it was down 14.2% compared to last year. But from a quarterly perspective, from January to March versus a year ago, the average sold price in Delray Beach is up 19.6%. This trend is not your friend if you're thinking about selling in Delray Beach. And it's absolutely your friend if you're thinking about buying, which takes us to Boca Raton. And in March of 2023, single family homes in Boca Raton took a beating. The average sold price compared to February was down damn near 20%, 19.7 to be exact. But compared to the same period last year, it's up 3.7%. And quarter over quarter, it's up 12.2%. The trend is not your friend if you're thinking about selling a home in Boca Raton. And it's absolutely your friend if you're thinking about buying, which takes us to Boynton Beach, Florida. And single family homes in Boynton Beach, Florida were on the uptick in March of 2023. And compared to February of 2023, the average sold price upticked by 1%. And compared to a year ago, the average sold price in Boynton Beach upticked by 13.1%. Double-digit growth in Boynton Beach, March of 2023 versus March of 2022. And when compared to the same quarter a year ago, the average sold price in Boynton Beach upticked by damn near 12%, 11.7 to be exact. And to be abundantly clear, this is the big picture overview for March from a macro perspective, and the hyperlocal markets that you are shopping in within any of these cities are going to trade differently. There will absolutely be a different intensity of supply and demand depending on which hyperlocal market that you're shopping in, which is why it is critical that you work with someone who understands the hyperlocal market in order to advocate and negotiate for you the right way. Because ain't nobody on my watch going to allow you to overpay for a home. And ain't nobody on my watch going to allow you to overprice your home if you're thinking about selling. But we will definitively price it the right way to create a market within a market, which creates a competitive dynamic of multiple buyers bidding the price higher, finding you the one buyer on planet Earth willing to pay more than anybody else. I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with the...
All right, first question. Is there ever a situation or time when it is allowable or appropriate for a man of his age to use the word likey?
Ooh, yeah. I don't. Maybe if he's talking to like his grandson or his son,
A baby.
Yeah.
Throwing in me before likey, even worse. Look, me likey. What on earth happens to where you would think as a grown man that is okay? And like, bro, there's like Bugle Boy jeans and New Balance tennis shoes, and then there's that. That is beyond the worst. Like, I'm almost at a loss for words that a guy that smart actually put that on YouTube. Did anyone else think that? I'm getting a lot of funny faces.
It's giving me Michael Scott vibes for sure.
Yeah. And he said something at the end that I lost it because I got stuck on the me likey. But there was another thing that he was saying that was almost as bad right at the end. Did you guys catch it?
I missed
What
that
was
part.
it? It was like when he was talking about like, I won't let you price your house too high. I won't let you overpay for real estate. Like the way he was phrasing that was really making me embarrassed to be white, if I'm being completely honest.
Oh,
There's a poor representation of like
man.
an entire race of people. You can't remember it? Does anyone else? Yeah, maybe that's what it was. Yeah, Zebra Journey says, yeah, that was weird. It was so weird. Like, where's that guy from? Where in the country are people living where that hasn't been checked up until this point? How'd you get that far? Oh, Lisa says, back to even negative advertisement is good advertisement because we're talking about it. We're giving, okay. Yeah.
That's true. Yeah.
Me likey Mike real estate. If you likey good deals, come my way. All right. What did you think about his content if you were able to actually pay attention to any of it, Kyle?
Yeah, I think he brings up some good points. It's similar to what we already talked about, right? CPI numbers came in light. The stock market reacted positively. Inflation's a little bit still on the uptick, but it's slowing down. And then the places he's talking about, I'm not a huge Florida person, so I don't know a ton about it. But I mean, I would think I've heard Boca Raton is really nice. Delray Beach is nice, and if prices are dropping in those areas, that could be a good opportunity for people looking to get in that market. But at the end of the day, hyper local markets are always going to be different. And so it's super important to make sure that you're working with somebody that can negotiate effectively. And maybe if other agents are using the word likey, maybe that's what you need in that market. So
it's making me laugh, man. Like, people are putting that in the comments. Me no likey. That is so dumb. I don't know why. I can't poke it past it. Boca Raton is a hot market. So basically, if you think about South Florida, Miami's like I often talk guys about how to understand real estate markets. There's patterns you pick up on. There's always an epicenter, which is like usually the financial district where all the money is. This is the best place that you want to live. And then you spread out from that epicenter and you find real estate progressively gets cheaper in waves as you go. And when you get far enough away from the epicenter, you'll literally get good neighborhoods, bad neighborhoods. But typically, there aren't really bad neighborhoods that are really close to that epicenter, unless it's been like a city that's been mismanaged or something like that. Like maybe Chicago, I can see might have, even though that's the epicenter, you could have some bad neighborhoods within Chicago. But generally speaking, you don't see that very often. Miami would be the epicenter of South Florida. Tampa would be another one. Orlando would be another one. That's why Tampa and Orlando together, that area is exploded, because you have two epicenters, which means all the real estate around them has been close enough to both that it can go up. So if you leave Miami and you go north, there's several cities, but the ones that like are most prominent to me would be Hollywood, Florida. I bought a property there. Go a little bit north, you hit Fort Lauderdale. I bought a property there. Go a little bit north, you hit Pompano Beach. I bought a property there. Go a little bit north, you hit Boca Raton and some other Cajun names that I don't remember. People in Florida probably think that sounds ignorant, and it is, but I'm just being honest. I just don't remember what their names were. So Boca Raton is a nice area, but you're getting kind of far away from Miami by the time you get all the way up there. Anything past that, it's like you're probably not commuting into Miami anymore. You have to work in that location. So those are hot areas because Miami is some of the hottest real estate in the country. And as it becomes expensive, people flow out. That concentric circles expand away from there, and it brings the values of all the other property up too. All right. Should we bring in Kahinde? Are we saying that right?
Let's see. Did we say your name right there?
Yes, Kahinde. Yeah, perfect. A lot of people don't like to try, but I give people the chance to do so. But you guys,
I would go with Kahinde Oye.
Yeah, Kahinde Oye.
Am I close?
Yeah.
What country is that from? Can I ask?
Oh, Nigeria.
Nigeria. That would have been my guess, but I didn't. I mean, you guessed wrong on that. You sound bad, but I would have guessed. Like, something about it stood out. There's a couple Nigerians that train jiu-jitsu with me.
Yes,
you sort of pick up on the patterns of the words.
You train too, so some of them introduce.
Do you really?
Yeah.
Well, dude, they're doing pretty good in the UFC right now.
Yeah, that's right. I keep saying it. Yeah, he's killing it.
So what's on your mind today?
So I got a couple of questions. First of all, I bought a house with my wife back in September of last year, and it's a single family. But I'm doing a lot of research, listening to a lot of your podcasts to venture into the real estate market. However, I'm thinking as a newbie, would I have some cash set aside to just buy a rehab? So I don't know if buying a rehab and just reselling it is the best way to go, or just looking to venturing and using my current place as a investment property. Again, like I said, we've just few months here already. Or what's the best way to venture, at least to start with? Should I start with a multifamily, or what's I think the previous caller said something that was really pivotal. He said, you hear a lot of information, but you still get something, right? But
yeah,
out of the whole waters, what should I be doing right now?
All right, let me ask you a couple questions. Do you have some cash in the bank?
That's
like
correct.
Enough for a down payment?
Yes.
Okay, good. And you own the house you're living in right now, correct?
Yes.
If you moved out of it, would it cash flow?
Most likely, yes.
or at least be close, right?
Yes.
Okay. And then you have enough cash that you could buy a rehab, fix it up, and sell it if you wanted, right?
So I have enough cash to buy the rehab, but I'm thinking not to rehab, just trying to just resell back into the market. Just release
Yeah,
it.
yeah. But I mean, you have enough money, you could buy it and rehab it and then sell it. You could flip it.
Yes, that's
basically.
good. Yes.
Okay. Here's what I'd like to see first off. We're going to maximize every area, every angle that I could think of with real estate. So I want you to get pre-approved to buy a new primary residence, and you should talk to our lenders that can do that for you. That doesn't mean you're going to buy one. You're going to get pre-approved, and you're going to look for a specific house. Do you have any kids?
No.
Okay, it's getting even better. Is your wife on board with investing? Is she she wants to be financially secure? She's going to do what it takes.
Absolutely. She's really
Love
up. She's been she's one of my big advocates to venture into the market. So
okay, well, you tell her that I said she's awesome. I want you to look for a property somewhere out there that has more than one unit. Okay, I don't want you to have to rent out bedrooms to people and have strangers inside of your space. Can you find a property that has a basement, an ADU in the back, something that you and your wife can live in a one-bedroom unit or a studio or something that has enough space for you, and you rent out the rest of the house to someone else?
I think we can.
Maybe.
I mean, the Texas area, we don't really have a lot of basements right out here in Texas. But definitely, that's something I can start looking into to see if I can get something.
Well, you're going to look for what part of Texas are you in? Houston. Okay, I can connect you with the realtor out there too. You're just going to tell the realtor, I only want to see houses that have square footage that could be converted into something else or have additional living spaces. Okay, so if you could find a house that's listed at 2,200 square feet, but it really has 3,000 square feet because they just didn't update the tax records on that, and it either has a basement or a spare area. Kyle, what are some other things? Like maybe a garage that was converted into living space that's separate. Anything that is more than just one home, one unit in the house. And you live in the smaller one and you rent out the bigger one. And then you rent out where you're at right now. You can end up with a rental from the house you moved out of. You can then keep your cost of living way lower. Okay, so right now you're still making a mortgage on that house. Even if it's a break even, the new house, you're not going to be making a mortgage payment on, or if you are, it'll be way less. So you can save yourself a couple $1,000s a month just getting into a house that you own, that you live in a smaller part of it, you rent out the rest of it. Now that if that's $2,000 a month that you could save, that's almost 25 grand a year. Over 4 years, that's $100,000 from one move. Okay. It's not going to take all your money because you can use an FHA loan. You can use a conventional loan. Somewhere between 3.5% to 5% down is what I want one of our loan officers to do for you. Now you still have all your other money. Okay. You can look for opportunities to flip a house. You can look for opportunities to buy a rental property like the small multifamily. You don't have to choose this one, or this one. If you do it the way I'm saying, you can do all of it. And then I want you to focus on the best neighborhoods in Houston. Okay. How long have you lived out that way?
I've been here 4 years. Going 4 years.
Four. Okay. So you probably know enough about the city to know there's some parts of Houston that are good. There's some parts that are rough.
That's correct.
Right. Don't be tempted to go to the areas that are rough because they're cheaper.
And
you will hate being a landlord.
A whole lot of cheap properties in those areas.
Yes. You got to fight the temptation and go after those. You're going to hate it. Right. You definitely want to stick to the nicer areas. Find the house that looks like it has less square footage than it does, is priced according to the small houses, but it's actually a bigger house. And you can take that space and put a little bit of your money, 30 grand, 40 grand into fixing it up, adding square footage to it, living in that area that you fixed up to keep your expenses low, and then renting out the rest of it. Okay. Like if we can get your actual housing expense taken away, you don't have to get a bunch of cash flow. You don't even need cash flow yet. You've already eliminated a big expense. Then you can take your time looking for cash flow. Does that make sense?
Makes a lot of sense. Makes a whole lot of sense. I guess my next question is going to be, like I said, we've been here since September, and I think we got the house for about maybe 5.6%. And when is the right time for us to, since we're going to be moving out, using it as a rehab, is this the right time for us to, refinance?
It's a better time than it has been because rates just went down. Right. And we don't know how long they're going to stay down. I think they're more likely to go up than they are to go down more. But what's your rate right now?
Right now it's about 5.5, 5.6.
Oh. Okay, I'm not going to say that's good because that's not a great rate, but it's good because you could do a refinance and your rate wouldn't be that much different. It's not like you're going from a 3% to a 6.5%. That would suck. If you're going from like, a low 5 to a high 5 or a low 5 to a low 6, it's not going to impact you as much.
Mm. And is that I know we've not been here for a year. You can still refinance even though, because I heard you have to
sometimes
at least.
I need to connect you with one of the loan officers to ask that question for them to, and if the answer is no, they usually go look for a lender that will. They'll try pretty hard to find a way to do it before they just give up.
Okay.
All right, Kahinde.
Well,
thanks for coming on, man. We appreciate you.
Thanks, Kyle. Yeah, you too.
Yeah, thanks. Bye.
See you next Friday. Oh, Christopher Lockwood.
What's going on, gentlemen? How you doing?
Has anyone ever told you that you look like a Christopher Lockwood?
A couple times, yeah. Mostly
I didn't think you could just be me.
You look like you could be in like Yellowstone, the TV show, or something like that.
Well, I'll take an extra role any day.
Absolutely. Nice. What's on your mind tonight?
Been listening to you guys for a long time. Been in the game for about 2.5 years now. I actually am in the commercial real estate space for my W-2, but certainly loving the fact that I'm getting some 1099 income from what I'm doing on the single family rental side. So this actually brings me to my question, y'all. This is the first time that I've actually started to talk about tax protests and being able to lower my tax amounts that I'm paying every year. But I haven't heard you guys actually comment in regards to the tax protests and your experience with that. So I would love to get y'all's feedback just on some of your experiences from some of the protests that have worked in certain states and some of the protests that haven't. I have my single family rentals in Texas, which is obviously a higher tax rate for single family homes. So would love to just hear what y'all thoughts are in regards to the tax protest, whether or not it's worth it.
Well, I'm trying to do one right now on a very expensive property. They had my property taxes on that thing went up to $525,000 a year. When I bought, what's that?
Is that the Scottsdale one?
No, that's it's a commercial property in Minnesota. But I think when I bought it, the previous owners were at like 375 or something. It's like way higher. So we're in the process. And when I say we're in the process, I mean the property manager has a person that does that is claiming that they're working on it, but like you never know, right? I'm not actually intimately involved with what that process is going to look like. So it's frankly, it just feels unfair that rates could go up, making the property values go down, especially on a big commercial property like that, right? Like when I bought that thing, I bought it at a 3.25% rate. If I were to sell it to someone who's getting a 7% rate, like it can't be worth as much to them as it was worth to me. That's impossible. Right? My mortgage was like 65,000. Theirs would be 105,000. So it has to sell for less, which means it's worth less, which means the taxes should be lower. But because it hasn't sold yet, the government's going to say we don't have to drop the tax basis, what it's assessed on, which is it's BS, right? But they have an argument if they base it off of comps. And so they're going to wait till everybody forecloses before they turn around and say, okay, we're going to drop the prices. I don't know exactly how that's going to work out. And I can't answer your question because I haven't seen it yet. You might actually have more information than me. Can you share like some of what you've been seeing with other people?
Are you talking in my experiences or Kyle's?
Yeah, in your experience.
So I actually have not yet done any tax protests. I actually just signed up. And there's obviously a ton in Texas, a ton in Houston. The fact is that I just don't know if the juice is worth the squeeze. And
how much what's the process like? Explain it for us.
Oh, it's a simple process. I mean, basically, in essence, you just go on Google, look at some of the reviews. In fact, actually, the company that I went with was from the Bigger Pockets forums, where some people recommended it. And so it's a simple process of just you giving the information, sharing sharing your information, sharing the information in regards to what you've done with the property, if there's been any repairs, if
I think we lost him.
We lost Lockwood.
File electronically and see if there's been any tax savings or whatnot. But I haven't done it yet. I've just signed up. And
does it cost anything to do? Is that why you haven't done it yet?
No, it doesn't cost you anything. It's basically, in essence, I've seen anywhere from 35 to 50% of the savings is what they'll take. So let's say you've got
who's they?
Any of the tax protest companies out there. Any
Okay.
specific within these tax protests throughout the United States.
I think this sounds like a great business. I wouldn't mind owning a tax protest company because it's free for someone. If they lose, it's only upside, but then you get a ridiculous high. I mean, 35% seems pretty high to me.
Oh, I've seen 50,
would get,
which is 40% is the norm from what I understand.
Well, here's what I think I should do. Go ahead, Chris.
Specific, though, they could be county specific. Who knows? I only Texas and actually only invest in Houston. So,
but your savings in Texas are so significant because they're 2 to 3 times higher than what they are in almost all the other states in the country. Right? It's a huge chunk of your cost of owning a home is the property taxes.
Correct. So it's interesting. I haven't actually done it yet, which is why I was curious just if anyone had any feedback on it. At the end of the day, if you're not doing anything and you're having someone work for you and they're going to take 35, 40% of that, of the savings that they provide you, I think that's a win all day.
It is because you were going to pay it even if you didn't have them. There's no downside to you.
Exactly. And from what I've learned is that, if you have 15, 20 properties, then obviously that's going to lower. If you're the landlord that has 3, 5, 10 properties, you may be able to negotiate with certain ones. But from what I understand is that once you get to like the 20 plus, that's when you're actually going to get some tax savings. I'm sorry, savings on the amounts that you're getting. Certainly.
Well, you are in luck because at the last retreat we just held in Scottsdale, one of our attendees does this out of Austin for a living. She works for a tax firm. Or not a tax firm, a law firm that works for people like me that have a big property that we need to try to get the property taxes lowered. So Kyle, could you make a note to see if we could get Rachel to come in on Friday or when she can, and we could actually follow up with Chris's question here and have her explain how tax protests work, who they're for, who they're not for, what options are out there, and see if we can get some information out.
Yeah,
she's in DG's world, everybody. So you'd be able to ask Rachel everything that you ever want to know about this if you're in that group.
Now, I could be wrong, guys. Hey-o, I'm back at it. I could be wrong, guys, but I do believe that the tax protest deadline for Texas or for Montgomery County specifically is coming up in a month. So this may be timely to bring up maybe on one of the podcasts or one of the conversations we're having. So
that would be awesome.
Yeah. Appreciate the feedback, and I would love to listen.
Thanks,
to it.
Chris. Man, I'm glad that you came and asked this question. Everybody loved it. I just wasn't prepared to answer it. This might be only the second time that I can admit I don't have a ton of information to share on something at all. The other one was when someone asked me about what do I think about climate change, melting icebergs, and coastal cities going underwater and the risk that you have to take with investing. It's like, I just honestly can say I don't know. I don't know enough about that to know like how significant of a risk that is. And I was not expecting anyone to ever ask that. This would be the second one where I'm like, that is a great question that I know embarrassingly little about. So thanks for bringing that up, because I think a lot of people here were like, oh yeah, this is good. We want to learn more about that.
Yeah, this is the first question that I've asked y'all in the last 2.5 years. So
you brought the heat, man.
Hey man, I appreciate what y'all are doing. Just again, I'm sure you get this all the time. Just thank you. But I love what I'm doing, man. It is so much fun. I love the mailbox money. I love the fact that I've got people working that mean a lot to me, that I'm able to put money in their pockets too. So I'm just getting.
Well, make sure you spread this video to your friends and tell them that you stumped David Green and give them the timestamp.
Well, why don't you put that on the next podcast, and I'll be sure to send it to him as well then.
All right, Chris. Thanks, man. Have a good Friday night.
Be well.
See you, Chris.
And that's going to do it for tonight. Kyle, any thoughts on your end?
No, I'm excited to see if we can't get our retreat attendee to maybe come out and join us here this next week. Should be a lot of fun, but excited to see how this Kings Warriors playoff game. I think they're actually playing right now. So
I was wondering that, and I didn't Google it to see.
I think they started at 5:30.
Here's what my guess would be. My guess is municipalities know that they need money, and hardly any governments are managing their budgets very well. So they don't want to drop down what your helm is worth, because then they collect less money. They have to cut social programs. That makes it harder to get reelected. So they're going to fight you when it's not really fair. That's what my gut would tell me about this, but maybe some areas are going to be kinder to investors than others or homeowners.
That's a really good point.
All right. Well, that's going to do it for tonight. Thank you guys for joining us. Kyle, thank you for joining me from Arizona. Guys, please make sure that you're subscribed to the channel so you get notified when we're going to do these lives. Like the video and then tell other people about it. You can follow me on social media at DavidGreen24 and Kyle at Kyle Renke, KyleRenke. Anything I'm missing there, Kyle?
That's it. Make sure to hit like, subscribe, and share this with your friends too. Hope everybody has a great weekend, and we'll see you next week.
All right, guys.
Bye.